Good morning and welcome to the Government and Not-for-Profit Financial Reporting Update. This is our second session and we're dealing with a much more upbeat topic today. We're looking at revenue and income. Before we commence, we would like to pay our respects to the traditional owners of where everyone finds themselves here in Australia and pay respect to their traditional, to the elders, past, present and future. Today's session, Wayne and myself are going to look at the new accounting standards, AASB 15, new revenue from contract with customers, and also AASB 1058, which is income, the standard. And we're really going to initially start off and launch a poll asking you, to what extent do you anticipate that your income and revenues will change because of the adoption of AASB 15 and AASB 1058? So we're seeing from the clients that we're working with, in a number of instances, the timing of recognition of income will change. And it may not be how you're currently doing it. And so that's why we're quite interested to know to what extent you think you will be impacted with this. So we've got the poll open, and whilst you're answering that question, I just want to let you know that I will be dealing with and talking to you about AASB 1058, and I'll be handing over to Wayne and he'll be dealing with AASB 15. We're getting some interesting results coming through. And I guess it's not surprising, actually looking at the results that are coming through, that most people are saying they do expect some impact, because otherwise you probably wouldn't be on this webinar in the first place. So we've had 70% of people vote. So I'm going to close the poll now and I'll share those results. So 17% of people are saying they expect a significant impact. I'm a little surprised at that. I would have thought probably more people will be significantly impacted. Maybe your views will change once we finalise this webinar. 50% to a minor extent and 29% too early to say. So that is quite telling, because I think hopefully this webinar will help you get a feel for how you will be impacted. So Wayne and I've got some work to do today. Wayne, what did you think about that?
I do think the too early to say is a tad worrying, that if you are impacted by this, there's lots of work to do, lots of splitting out revenue, splitting out items from 1058, and you should not underestimate the potential work if you're cut up with these, and how it can significantly change your results. And your boards, etc., your donors, your stakeholders don't like surprises. So I hope you don't surprise too many people when you would finally adopt these standards. So looking at today's session, as Susan said, we're going to run through AASB 15 and AASB 1058. Recognising the rest of Australia, the for-profit sector applied AASB 15 last year, and that's trying to shoehorn not-for-profit organisations into IFRS 15, a major standard for for-profit entities. And we've also got the challenge of this interaction with 1058, a very Australian specific standard that deals with your income largely if it's not within AASB 15. These are hangover slides pre-COVID. So as I mentioned yesterday, this is a big year for not-for-profits. You've got the triple whammy of 15, 1058, 16. It was always going to be a challenging year. And just to make life more interesting, we've got COVID and all the COVID issues myself and Susan dealt with yesterday. So this reporting season, 15, 16, 1058, and from a government perspective, the major thing on the horizon is 1059 that you'll be dealing with from 1st of July. So AASB 15 is a very, very complicated standard. Its origins are US GAAP. Its actual alignment is the international accounting standards are aligned with US GAAP. And we now are taking this Rolls Royce of a complicated standard and applying it to the not-for-profit sector. We're applying it to golf clubs. We're applying it to cemeteries, etc., etc. So it was never designed really for the not-for-profit base. So it's going to be quite challenging. And I'll re-emphasize, there is no such thing as the matching concept. So common sense, I will automatically match my my income with the service that I think I performed, does not automatically flow. So the biggest challenge that you need to consider before you jump into 15 and read 15 is actually which standard you're in. And AASB 15 is revenue from customers. If you're leasing an item to a third party, that's a lease income and it's under AASB 16. If you're receiving interest income, dividend income, that's under AASB 9. If you're not providing a service, but you're receiving money from a donor, you're receiving money from the government by way of a grant, and you're not providing a service, you're under 1058. And a major concept of AASB 15 is, in order to recognize revenue, the customer must receive a benefit. And a very, very easy, unpleasant impact of AASB 15 on this sector is if you have a joining fee, do you actually provide a benefit? Now, the example that was always given in the for-profit world is you have a gym, you pay $1,000 joining fee to join the gym, and then you pay $100 a month on a monthly basis for as long as you live in the gym. A lot of people would want to recognize the $1,000 joining fee as revenue when you receive it. Debit cash, credit revenue. It's a non-refundable fee. AASB 15 says no, you don't get a benefit from activation, you don't get a benefit from those joining fees, and therefore you need to estimate how long that customer will be a member of a gym and spread the $1,000 over that life. So obviously all the golf clubs that would typically have memberships, all the footy clubs, etc., any joining fee you now need to defer, and you now need to estimate how long your members will continue to be members for. And obviously in some golf clubs, some the MCG, etc., people are members for 50 years, 30 years. So you've got to go back and work out what deferred revenue you should have. Schools were massively impacted by it, all the enrollment fees, the joining fees, the upfront fees that people are paid. Well, are they actually getting a benefit on day one, or are they going to get a benefit when their child starts school, or even are they going to get a continuing benefit until when their child finishes school in year 12? Major questions now are being debated about whether you're agent, whether you're principal. Are you the person that's actually giving the benefit to the customer, or are you just a post box to collect monies and then you pass it to another person that is, or organization that is responsible for delivering that benefit? So absolutely, you need to go through the matrix. Make sure that you're not in AASB 16, that if the monies that you're receiving are for the use of an asset, then you're in a lease situation. But if you think you're in receiving money to provide a service, you need to go through this matrix. And are the funds received for the purpose of acquiring or constructing a non-financial asset? Yes. So I've given you a donation in order for you to build a new swimming pool, to build a new town village hall. That will go into 1058. Does the transaction contract with the customer that created enforceable rights? Well, if you've got no obligation to perform a service or provide a good, you're not within the scope of 15. Does the contract include sufficiently specific performance obligations? Yes. And again, this new world, the whole introduction of AASB 15 introduces a whole new concept of terminology, a performance obligation being one of them, a PO, and we'll also be talking about contract assets and contract liabilities. If the terms of your arrangement are not specific enough, you end up into AASB 1058. And as Susan will deal with in much more detail later on, AASB 1058 in a lot of cases ends up that you recognize the income when you're entitled to receive that income, rather than when you've performed a service. So you end up significantly in timing, and it is very, very important that you distinguish between 15 or 1058. And as a way of an example, this distinction, so a school, and this is again the good old days of pre-COVID and we could do fundraising, a school sells a dinner ticket for $600. In the event that the dinner is cancelled, the ticket holder is entitled to a $300 refund. But obviously the dinner, if you were going standalone to the Westin, etc., it would cost you $250. So the school determines that there is actually a $350 donation. So in this example, we have $600 cash. You are providing a service, which you're providing food and entertainment and wine, etc. That 250 is within the scope of AASB 15. The 350 donation is within the scope of 1058. So when the parent pays you the $600 cash, the $250 is deferred. You've not run the dinner, they've not provided the service of the dinner, the entertainment, but the donation is under 1058. You now have control of the cash, so you recognize the cash immediately as income. You recognize $350 as income immediately. And again, if people are prepaying their fundraising, so if you were collecting monies in May, June, for events, galas that would be running in July or be running in December, you have a complete mismatch as to the revenue recognition flowing through. The when you do hold the dinner, you've provided the service, you've provided the $250 worth of service, so you go debit unearned income and you recognize the service income for the $250. Horribly pertinent in today's environment. If the dinner ends up being cancelled, then you don't recognize the $250 in unearned income. You just go debit unearned income $250. But you'd promise that if it was cancelled, you'd effectively return $50 of the donation, and that would go through as another expense. Core principle of 15, everything is to do with the transfer of control of a good. That is the whole basis for when you recognize revenue, that when you've transferred control, you can recognize revenue. And have you got an enforceable right? I've done a service for you, I've given you a good, but you don't have to pay me, or you might want that. You can ask for your money back in a return. That would not qualify for revenue recognition. And the model is quite interesting because I've actually been presenting this 5-step model for about 7 years now, but this is the only audience I'll be presenting the 5-step model to this year, because this is especially now for not-for-profits. So you have to identify whether you have a contract with a customer, and you can't actually divide the contracts into separate little bits to avoid it. If you negotiate a contract or a series of contracts with a customer at the same time, with the same over economic aim, that they only entered into contract 2 because they'd agreed to enter into contract 1, you have to put them all together. When you're looking at performance obligations, have you bundled an offer to the customer? If you're a golf club, on the initial joining fees, have you bundled the joining fee, the initial course fees, and have you thrown in some free goods, some golf umbrellas, some free pro lessons? You've bundled it. Variable transactions, is there any right of them, the customer, having a rebate, any refunds that will happen as liquidated damages if you've not performed? That has to be taken into account. If you have bundled a number of performance obligations together, you have to separate out those components of the overall transaction price. You have to allocate the components to the individual performance obligations, and that's based on their standalone selling price. Just because the invoice says 0, just because you've said, I'm going to give you this for free, again to the golf club, I'm going to give you free golf lessons, I'm going to give you free tournament fees. When you actually run it, when you actually do the accounting, you would allocate part of the original amount that you received to the pro fees, to the green fees, etc. And you can only recognize revenue, step 5, when you've satisfied your performance obligation. So commercial substance to a character. So step 1, have you got a contract? Is there a legally enforceable right with the counterparty? Principal versus agent. And this is a very simple example, which would is very problematic for say school. So school organises an overseas trip. School A collects money for the students and then pays the travel agent to arrange airfares, accommodation and transfers. Are you the principal? Well, you made the booking. It's the school that made the individual booking. It's the school that bears the risk of non-performance. But if you've actually just collected monies and you've paid, everything's booked in individuals' names, you become agent. And a number of organisations on this call, you may be the postbox for collecting monies from government. So you are the person that collects the grant applications, you're the person that takes charge of putting an application together from the funder, but all you do then, you don't actually deliver the performance. You just collect money and you pass it on to another not-for-profit, another organization, and most likely your agent. Now, this can significantly impact the amount of revenue, the amount of income that you report. Can the customer benefit from the good or service? And this goes back to the joining fees, the membership fees. If you do not benefit from it, you can't recognize it. And if it's not distinct, the classic example is, I promise you to build a wall, and therefore I raise two invoices to you. One is, this is the invoice for the bricks, and here is the invoice for laying the bricks. It's not distinct. I promised you, in the context of the promise I made to you, the bricks are not distinct from the bricklaying. Therefore, you recognize revenue as you build the wall rather than as you deliver the bricks. A very busy slide, but is all very interesting of what you do even in COVID. I was listening to conversations of how the MCG are going to treat their members this year. Conceptually, you pay a fee to the MCG to watch football. There's not been much football played so far. How do you recognize it? So in this case, you have an annual non-refundable joining fee, $5,000. You go debit cash, $5,000. A lot of organizations, golf courses I know of, etc., would have gone debit cash $5,000, credit income $5,000. It's not refundable. Under AASB 15, you need to work out how long is the member going to stay a member of this footy club. And you go debit cash 5,000, and you amortize that 5,000 over the estimated life. So this is a major exercise on transition. And I'm going back to, I'm a bit concerned of the 29% of people on this call that said it was too early. If you've got membership arrangements, you actually have to do quite a big exercise to go back to see how much you defer. And you'll get some very strange results. Some of your 70-year-old members actually joined 50 years ago, and you'll find, it was in pounds and shillings. Another, going through the question again of distinct good or service and the differentiation between donations and differentiating it from revenue. We have a school we have a zoo that takes donations, and part of their annual joining fee, you can have an annual season ticket to access the zoo. and the conditions are if the zoo is not available, then the whole of the donation is prorated back. So zoo's not available, that is actually all of under AASB 15, even though you've actually labeled part of it as a donation. But if you've split the monies you receive, that if the zoo's not available, you only give back the annual access fee and the donation is not refundable, then you've got a situation where you're in both 15 and 1058. Just for real information, the AASB 15 has this concept of variable consideration, and you can only recognize revenue if it's highly probable that it will not reverse. In a not-for-profit sector, it is unlikely you're going to have these major debates. Major issue for you, say the clubs, the golf clubs, anybody that bundles elements, particularly with your season tickets, your corporate sponsorship, that actually spans over a reporting period. And you're going to have an issue for your junior ends. If you do all your events and all your season tickets that run on a financial basis from the 1st of July and everything's satisfied by the 30th of June, these allocations are not that significant. But if you bundle products that span across a reporting period, so you actually have annual memberships that run from 1st of December and go to the 31st of December, you may have major issues. If you are something like a golf club that actually is very willing to sign people up any month of the year, and you give them various offers that will have a 12-month life, this allocation of consideration to the individual components of the purchase obligation is a challenge for you. Everything's to do with control. So have you satisfied your obligation? Have you passed control of the good? And you actually end up with this concept, although it's a control model, it is very difficult to have that control model when you're providing a service. So the logic within AASB 15 is that you're receiving and consuming a good instantaneously. So when you actually have access to a gym, have access to a golf course, when your child is being taught, that's when you're actually providing the service and satisfying your performance obligation. There are a lot more disclosures around this, and I say too many times, Excel, I refuse to believe Excel is a spreadsheet, but you will have to know all sorts of different connotations. And for the accountants on the room, are you truly on top of what your fundraisers are offering? And you've got all your corporate teams that are trying to bundle to get sponsorship from companies like BDO. You're offering us packages for your members that you're trying to attract to your sporting clubs, or are the accountants fully on top of what is being offered to entice people to donate, to join, etc.? And you, the accountant, cannot no longer rely on, this is the invoice, this is the cash being received, and I will recognize the revenue when the cash is received. It's far more complicated than that and will require different changes to systems, etc. You had the choice, retrospective model or a cumulative effect. Are you going to restate last year's comparatives, or are you going to have a mismatch that you're going to recognize revenue in 2020 based on 15, but your revenue that you recognized in 2019 was actually based on the old standards? That almost sounds attractive, but you're going to confuse a lot of your members, a lot of your donors, if there's been a significant upturn or downturn in the revenue you recognize. And again, yesterday we dealt with a lot of the disclosure requirements that you'll need to make because of COVID. The 101 disclosures, the 108 disclosures, the AASB 7 disclosures. The world is disclosure. So how have you changed? What were the transition methods that you did? A number of people will, when I say that you can actually only do it from, you have the option to transition from the 1st of July 2019, don't restate your comparatives. That prima facie sounds an attractive option. It makes no sense because you're showing an income statement that has got apples and pears. But if you go for that option, in your notes, you now have to show the old way of accounting for it. So you say, this is the 2019 results as was audited, as was released. Now I'll show you the 2020 results in the old way of accounting. So there's lots of disclosure and lots of complications within the notes. You may reduce revenue. You may actually decide you're an agent, so that significantly changes your principal accounting. You'll end up with a very peculiar amount for the schools, for the golf clubs, for anybody with joining fees. You've suddenly ended up with large liabilities. If I defer income, then that's a credit. And some not-for-profits are almost looking insolvent because of the scale of the deferred membership fees, even though there is no obligation ever to refund those membership fees. The new world, I said there's a whole new concept in terms of performance obligations. Strictly, you have no such terms as deferred revenue. Deferred revenue liabilities, you now have a contract liability. You don't have accrued revenue, accrued income. You actually should have contract assets. So it was a major change. The for-profit sector, definitely in Australia, and I think for most of the world, has really, really struggled to come to grips with it. And now, unfortunately for people on this call, the new world of 15, the complexities of 15 come up to this sector. So Susan, have we had any questions on 15?
Well, we have had two questions, and it's very interesting because the questions that have come through really are highlighting how it is difficult to determine whether you're in AASB 15 or AASB 1058. So this is really the challenge, I think, that the not-for-profit and government sector have, is with two income and revenue standards, you're really dealing with, you know, having to then try and work out initially which standard to apply. So the first one is, how would you account for an unconditional grant arising from a one-off transfer from another wound-up charity where the terms of the grant don't create any enforceable rights and obligations other than a broad requirement to apply the funds to meet the transferee charity's broad objectives? There's no requirement to refund unspent misapplied grants, provide progress financial reports, and promise to deliver goods or services that are sufficiently specific. So what do you think, Wayne? I would have thought this one is within 1058.
Yeah, with the caveat of question without notice, it sounds 1058. You've not provided a good or a service. You've got control of it. And the question the question then goes on: at what point do you get control? At what point under 1058 have you an enforceable right? Do you apply cash accounting, which I don't like personally, that you recognise the 1058 income when you receive the cash? Or was there a point before it where you could say, I'm entitled to it, nobody can change their mind, and you actually recognise a receivable?
The second question was, not-for-profits often receive government funding for delivering a service to a third party, patients, participants, carers. How is the government funding then treated by the not-for-profit organisation? Who is the beneficiary, and how do you determine the performance obligation? I think that's kind of falling within my space, isn't it? With
I think you're going to try and answer that question, and horribly it is facts and circumstances, and it depends. And depending exactly on your arrangement with the government, you'll flick between 15 and 1058. Which is...
Yeah, so at the end of my little section, I've got a number of case studies, and we've got the different scenarios and how just a slight change in facts and circumstances can move you from 1058 to 15, and so hopefully that will be useful to you, because the first bit about is with this funding question is there a right of refund? Is there a legally enforceable right? Because then if it's not an enforceable contract, you're immediately in 1058. So that might be your very quick answer to the person that's asked that question. But we are going to work through all of that. So I will take over from Wayne right now. Oops. Oh, sorry. I was trying to get the slides to work for me and flick through too. So which standard to apply? We've looked at this, but this is where you're going to keep coming back to. You will be looking at, are the funds received for the purpose of acquiring or constructing a non-financial asset? If it's yes, you apply 1058. And I have got a slide that will deal with that. Then we look at, does the transaction occur? If it's not about an asset, does the transaction occur in a contract with a customer that created enforceable rights and obligations? And this is really about legally enforceable rights. Can you legally enforce this person to give you the money? And if you haven't delivered the service, can you require a refund? And if there's legally enforceable rights, then you may be within AASB 15. That's your first hurdle. But as soon as you say, no, there's no legally enforceable rights, you're in 1058. Then you have to understand, is the contract sufficiently specific and create sufficiently specific performance obligations? So promises by the not-for-profit or government entity to transfer goods and services to customers. And that is where we often find the key judgment areas arise. And as we talked about yesterday, your financial statements need to disclose key estimates and judgments. So these key judgments about what constitutes sufficiently specific performance obligations is probably one of the key judgment areas and disclosure areas arising from the adoption of 15 and 1058. So for a performance obligation to be sufficiently specific, basically you need to understand you've got activities, outputs, and outcomes. And are those activities that you've been asked to perform, is it clear when you've performed it? And so can you identify the outcomes that you're required to make? And I have seen situations of, someone's been granted money in order to employ a person. So for example, in relation to providing, you may get a grant from a mining company to employ a person to be a ranger in a certain area, but the requirement was just to employ somebody to do activities that a normal park ranger would do. That isn't sufficiently specific because the entity, the government department, is getting control of that person and they're directing their activities. So it's internal, and this is really just a funding arrangement. So that falls within 1058. But if the activities of that employee were being directed by the party that's paying the money, then that could be external outcomes. And so this idea of determining, is it sufficiently specific? Just employing someone isn't sufficiently specific. Saying what the outcomes and the performance, the work that that person must do, that is sufficiently specific. And that's where that key judgment can be. So the scope of AASB 1058 also includes volunteer services and also transactions where the consideration to acquire an asset is significantly less than the fair value, principally to enable a not-for-profit to further its objectives. And we see this a lot in this sector. So with volunteer services, with the government sector, you must recognise volunteer services at the fair value unless you can't measure those volunteer services reliably. So that's a key point to understand. And I know from talking to people in government departments, they tend to be able to wanting to say, well, we can't measure it reliably. But then that really raises the question, is if you don't recognise the service, is it showing that you're not valuing that volunteer service? You know, if you've got directors on your board and they're volunteer directors, is that just saying to them, well, you know, we could price your services, but we're not going to. And I know volunteer services are a big component of this sector. Wayne, did you have any comments that you wanted to raise in relation to volunteer services?
No, just re-emphasising it is political sort of motivation. The obvious one in here is just don't recognise the service. It's very difficult for some volunteer services to put a real true dollar on it. But when you're looking at volunteer services boards, pro bono audits, etc., pro bono legal support, you can actually put a value on it. And is it advantageous to show that? But you're literally grossing it up because you will just be recognising revenue and an offsetting cost. But it is something to ponder. Back to you.
Yes, the slides are not working for me. Okay, transactions other than volunteer services. Is the transfer of the asset to the not-for-profit entity to enable them to acquire or construct a non-financial asset controlled by the entity? And if it's yes, then you recognise, you defer the income that you're being given. So you recognise the cash, but you recognise a liability, a contract liability, until you actually deliver, until you acquire the asset or until you construct the asset, and then you recognise the income in accordance with 1058. Now there is one particular issue with this, is if you have a situation that, you know, you're given money to do signage, but if you don't normally recognise that on your balance sheet because, you know, it's a pretty low amount and you don't want to put it into your fixed asset register. And I have seen this with a lot of, you know, government departments. They may be given, you know, a certain amount of money, like $5,000 for signage. They may not actually recognise those on their balance sheet. So then you don't defer the recognition. If it's immaterial, you can't do this deferred recognition of the income because you need to be able to capitalise the asset. And that's definitely the case, particularly with things like intangible. You may be getting certain intangible assets, but whether that would qualify for recognition, then you can't say you don't defer the recognition of the income. Transactions other than volunteer services. So how is the asset measured? And it's really a question of, when you're in 1058, you recognise the income when you have a right to the income. So you may recognise it as cash when it's received if you can't actually enforce the income. You don't have a right to the income until you actually receive it, and that's often the case with donations. But with government grants and things like that, if the paperwork's been signed, you don't wait until you actually receive the cash. When you've actually got a right and approval to receive that funding, that's when you recognise the receivable and also the income in accordance with 1058. So also looking at the credit is usually, when we're in 1058, you'll recognise it as either income or deferred revenue, contract liability, when you actually have the right to receive it. But you do need to consider other standards as well, which bucket the credit belongs into. Is this really income, or are there other areas that you need to think about? What is the contribution really for? Now, research grants has been an area that the AASB had to go and revisit their examples. And any contract is within the scope of AASB 15 if the three criteria are met: enforceable, sufficiently specific, and defined outputs. And how it applies to research grants and the examples in the standard, which example 4 deals with, is enforceable. Is there a customer contract? Are there rights and obligations? If there's a refund obligation or other significant penalty for non-performance, that will give rise to it being enforceable. Sufficiently specific is there a transfer of goods or services from the entity doing the research to the grantor? It's the benefit of research activities can take forms like intellectual property, license of intellectual properties, or research findings. And that's the transfer of goods or services that we're wanting to see in order for it to be within the scope of AASB 15. And are there defined outputs? So the benefit can be transferred to the grantor or to third parties. So if you receive a grant from the government to do research, and all the findings have to be published, then that is a defined output. Performing research without transferring the benefit is not a performance obligation. So just doing the research and having it, but not making that data and the research available to at least some party, means it will be within AASB 1058. Because otherwise you're really just receiving the benefit, so it's just a grant of money received to you. And these are the examples that are in the standard: a 3-year enforceable research grant, refundable if the research is not undertaken. So we get that enforceable bucket met immediately. The intellectual property is not transferred or licensed to the donor. And we're looking then, is there a transfer of research findings? Is it sufficiently specific, and are there outputs so that you can say, yes, this is in AASB 15. So the first example is, it is within AASB 15 because there is constant publication of research data as the research is carried out, and because it's happening as the research occurs, the entity that receives the grant recognises the income in accordance with AASB 15 over time as they conduct the research. Second example is publication of research data at the end of the research. There's no alternative use for the research, and there's a right to payment for research performed. You recognise the income when you do the publication, so it's point in time recognition in accordance with AASB 15. The next one is the grant does not specify whether and when research will be published, whether research will publish any research findings. It's point in time recognition in accordance with AASB 1058, and it's when the researcher has a right to receive the cash for the research. So it's not even when they receive the funding, it's when there is an enforceable research grant has been given to them. That's in accordance with 1058. So this really gets us into the practical issues if you have grants, really determining, is there an unconditional right to receive cash, who controls it, and when the conditions are met. If the not-for-profit controls it, you recognise a receivable, there's no concept of matching in accordance with 1058, and so you just recognise the income when you have that unconditional right to receive the funding. And there, even though you may have to do activities, AASB 137 provisions don't apply. It is income. It's income when you receive the grant funding, you don't sort of defer it and recognise it as you deliver whatever service you have to perform, because you don't actually really have to perform it. That's the thing. There's no legal right to refund, so therefore there's no provision. And this will really cause some income that normally would have been recognised in 2021, recognised in the current year. Moving on, in relation to sponsorships and donations, are they in the scope of 15? Well, Wayne talked about that issue, that you may have some of it within 15 and some within 1058. So that's something that if you do have sponsorships and donations, really understanding whether you need to unbundle the promises and split things out between 15 and 1058. So definitely sponsorship packages, and I know this is an issue for those in the performing arts, tends to be quite a significant issue. And research, well, I talked about the issues around research, and those examples in the standard are actually very useful, because that is there a promise to make available research findings and data, or who's getting the intellectual property from the research, because that is key to determining whether or not there has been a performance obligation that's been satisfied. Now, I did promise that I would talk through some case studies, and I think we'll just talk through these quite quickly. We have a charitable foundation set up by a school, and they get tax-deductible donations, and it's used on various initiatives to benefit the school, staff, and students. And we have Mr. and Mrs. Smith, and they very kindly donated $100,000 to the foundation. Now, in this scenario, in scenarios 2, 3, and 4, all monies unspent at the end of the stated period are to be returned to donors. So to be within AASB 15, it must be an enforceable contract. In scenario 1, there is no right of refund, so it's not an enforceable contract. So it doesn't matter, even if there's very specific conditions attached to the donation, you're immediately in AASB 15 because it's not enforceable. When it's enforceable, then you have to look and see, is it sufficiently specific or not in relation to what the promises are? And I think this really goes to that question that we received from one of the people on the webinar. And this is, in scenario 2, Mr. and Mrs. Smith state that the money should be used to further cricket at the school. That's just a funding objective. It's not sufficiently specific. The school can determine what that will mean for them. You know, are they going to buy more uniforms for the cricket team? Are they going to use it for travel to different locations. I mean, yes, it will all be around cricket and, you know, buying sporting equipment, but it isn't specific, and you can't really say as and when they've actually achieved the goals. In the next two scenarios, it is sufficiently specific because Mr. and Mrs. Smith are specifying how the money is to be spent and over what period of time. And that will make quite a big difference in terms of, yes, we can say we can identify when those goods and services have been transferred and have met the objectives that Mr. and Mrs. Smith set. And so in those scenario 3 and 4, we apply AASB 15. Moving on, a disability charity. Now in this one, there is a requirement. So in all scenarios, the contract is enforceable because the donation cannot be used for any other purpose and any unspent monies are returned to the donor. So in this one, we have an enforceable contract. This is a wealthy donor donates $500,000 to a public school to improve educational outcomes of students with disabilities. In the first scenario, we have the school must use the funds in a learning and support centre. It's not sufficiently specific. We're in AASB 1058. The next one is they must use the money to hire a specialist teacher for 5 years at a cost of $100,000 per year. Now that is not sufficiently specific. And this one is interesting because, yes, they've said what it needs to be for, but because that teacher's activities can be directed by the school, it's still not seen. It's just seen as more a funding arrangement than being a specific performance obligation. But when we get to the public school must use the funds in the school's learning and support centre for children with disabilities to hire one specialist teacher for 5 years, the teacher must teach in the learning centre for a minimum of 4 days per week during the school term. So because that's been specified, that then becomes highly specific. And the distinction between scenario 2 and scenario 3 is very, very small. And yet we're within different standards. And I think that's where this judgment area is really quite tricky. And I like this example because it really does show just how such a small adjustment in the wording of an agreement can cause quite a significant difference in accounting outcome. Because in scenario 2, when you sign that enforceable contract, you would recognise $500,000 by the school. Whereas when you're in scenario 3, you'd recognise it the $100,000 per year. And so I think most schools or people would want to be in scenario 3, not scenario 2. And I think we'll close it off there. We do have a couple of other examples on our slides dealing with an out-of-school care facility, but it's very similar, is that you must determine, is it sufficiently specific? This idea of it being sufficiently specific is important. And also we have the example of a rugby club, and you can see the different scenarios and how that will play out. But I think we've got a couple of questions. So before we close off the webinar, I'll hand over to Wayne and see if we can answer some of these additional questions. Wayne, I think you're on mute. I can't hear you.
Again, sorry, to be honest, Susan, I think with the interest of time and the complexity of the questions, it may be easier we'll get back to people offline. The questions are very detailed in terms of this subtle, and they are complicated because of how do you distinguish between 1058 and 15? And we've got another question as to JobKeeper. Do you think JobKeeper, as people will be getting JobKeeper and Flow Boost in June, that will be a 1058 income boost?
Yeah, that will be it really depends on, is it specific, and probably it's not highly specific, but that will be a matter of something that we'd actually need to look at the terms and conditions of those arrangements. I was going to launch a poll just to close off and see, and this is what will be your significant challenges in financial reporting. And we've said please select one, but we will let people select more than one. It'll be interesting to see if people now think that 15 and 1058 are going to be a significant challenge.
And
because I think the adoption of 1058 and how if you fall within 1058, at the time that you recognize the income, or at the time you have that unconditional right to it, you recognize all of the income. That is quite massive. And on the converse, as you were saying, with those joining and membership fees, that's just diabolical for people if you have to go back 20 years to work out, well, on transition, what is the impact? That's the really tricky thing with those membership fees for people like the MCG. People don't give up their membership for a long period of time. So if they paid something on transition, you have to go back and say, well, on the date of transition, the people that have previously paid membership fees, I've got to recognise an opening adjustment for that and go back in time and recognise that. So very interesting.
Definitely, Susan, listening to you and going through it, and even trying to field some of these questions that have come through. The world is complicated. AASB 15 is complicated, but once you start to try and get this interaction with 15 and 1058, it is difficult. And again, going back to that earlier poll, this is not something that you want to leave until September. It's something that really should be addressed as quickly as possible.
So I'm going to close off the poll. We've had a pretty good response, so I'll share the results. And look, yeah, it's not surprising that where people are saying the impacts will be are 15 and 1058. I think there's much more judgment there involved, particularly for the not-for-profit and government sector, than leases. Leases, if you've got a lease, in most instances, you've got the lease. So that's not probably, whilst it's a mechanical exercise and something that you have to do, it's not really quite as challenging as the issue that you find around adoption of these two standards and trying to work out actually where do you sit in these standards. And I think there is a real opportunity for people, particularly when they're dealing with the paperwork for creating grants and donations and things and research projects, is to be mindful of what accounting outcome you want. And maybe, you can put into certain terms and conditions into these arrangements to get either within 15 or within 1058, whatever your preference would be. Wayne, did you have any final closing comments for people?
Final comments are best of luck with this reporting season. I started off, I think, yesterday saying I do believe this will be the most challenging, complicated reporting season I've ever lived through. So best of luck to everybody.
Well, I echo that. And thank you everyone for joining us today. It's been a pleasure, and hopefully we'll be catching up with you soon. Bye-bye.